We've got bonds trading slightly higher this morning. They have been beaten up a little bit. Actually, bonds have a little bit of a cycle high here, telling us the market might run into a little bit of headwind. It is in a short-term downtrend, in a long-term downtrend as well. It's kind of channeling to the downside. We've been talking about how bonds could come back down to these lows, which for TLT is very similar, right back down to these lows over here. It has a definitely some big selling going on. This could easily flush back down and sell off. I'm not a huge fan of bonds. Short-term, long-term trends are both down. If we take a look over at the dollar, we do have the dollar down 0.5% this morning, so it's obviously running into its head into resistance. We talked about this yesterday, how it's popped right up into the 50-day moving average. We've seen this happen a few other times. We go back here and it gets rejected. So this big question is it going to find some type of bottom in reverse direction? If we take a look over at gold, so we've got dollar down, we have gold and silver up this morning. Only up a little bit in the grand scheme of things. Gold's been trading sideways. There's not a whole lot going on. And if we take a look at silver, silver's has already had that pop and breakout, and now it's consolidating with lots of volatility, which is what silver does. It is volatile, but it's trading sideways here in that next move, getting ready to run up to that next upside target, which let's just grab a level here real quick. I know some of you wanted a level there. We didn't touch on gold or silver yesterday, I don't think. Anyway, it's got potential to about 40.80 as the next upside move. So it's come to the 618. We got the hiccup and the pause here, the pullback. So the next run, I think, is going to go to 40.80, and that'll be a fairly significant level. After we hit that level, it could do something similar to these. We're talking a month-long pause and pullback, so don't expect, the markets just keep blasting and going higher. Obviously, that's always an option, but that's the reality of it. It makes these strong moves, and then it goes dormant for a while. Let's take a look over at miners real quick. So let's take a look at GDXJ. They're actually underperforming. They've been trading sideways and don't have the longer term. They're in an uptrend, trading sideways. They haven't broken out. They're kind of following more like gold. Gold is just sideways, trying to find some traction. And I've talked about how I'm not a big fan of the miners. I still prefer, if you were to trade something, it'd be physical gold or silver. I say physical, I mean GLD or SLV or any other ETF that holds gold or silver, because they're disconnected from the stock market, and I think they could do give you more upside potential, maybe without the volatility and a stock being stuck in the stock market. If the stock market does roll over, these are probably going to get hit, or they'll be muted. They just won't extend like the physical metals can because they're outside the stock market. Let's take a quick look at two last things. Overall, this is the IYR, the real estate REIT ETF. Overall, it is moving to the downside. It has this launch pad. It has this potential kind of rising channel or rising kind of flag. Overall, the pattern is down. This I do think the market does like to have these kind of upward running corrections. We had one kind of over here as well, where it kind of just chops and grinds its way higher, and then you end up with a little hook. People pop in, it has a big swing to the upside, and then boom, it snaps down and has a huge reset. That's what this could do. I think we could see one final little squeeze up, get people sucked in. I've talked about a running correction to the upside, how dangerous these are. They can usually have a big fake out to the upside and then have a huge crack in correction. I think the real estate space could go and do something similar to that. Very little upside, tons of downside going forward. If we take a look at the dividend space, SPYD, which are the S&P 500 high dividend stocks, kind of a similar chart pattern. Lots of volatility. One day the stock market was up, the dividend stocks were down the most. It was definitely some interesting money flows going on here. Pretty clear. We do have a series of lower highs, and we have a series of lower lows, and more or less price kind of, breaks down, moves up into resistance, and then slowly reverses trend and eventually falls off a cliff. It breaks down to a new level, kind of through here, and it comes up, it's kissing goodbye, and eventually this could easily move down and then head lower. This whole pattern here, this breakdown, and it finds a top and eventually starts to lose its trend and its momentum, is actually kind of similar. We're in the XLE trade, where we have seen price break down. It works itself up into resistance, And then eventually it has kind of a breakdown, and it forms a bearish pattern. And then if the stock market does roll over, we could have a discretionary trade to trade an inverse ETF in the energy space for a fairly significant move, which will probably be fairly violent in a good way. If you are short or betting on falling prices, we want a violent move, something like this. Something like this. That's your dream move if you play an inverse ETF. It means you get into the trade, and like every day or in a short period of time, that ETF skyrockets in value. And that's how the market works. It takes a staircase up and the elevator straight down. Trading a bear market and trading falling pricing requires a very different timing, very different mindset, and the trades are short-lived. You have to be aggressive in locking in gains. It's not about trying to catch the entire move. It's trying to catch some of it safely in the safest way possible and still benefiting from it. And that is the trick. It is easy to hurt yourself betting on a falling market, especially if you're in an uptrend, which we are right now. And I know many of you keep putting on and averaging into some inverse ETFs. I keep getting emails from you guys doing that. Just be careful. This market, just because we're bearish thinking doesn't mean the market is going to go down, and we don't want to fight the tape. Anyway, that's it for now. We'll talk to you soon. Bye-bye.